On the foreign exchange market, so many things are traded, such as currencies, that is money, different currencies from all over the world. We trade money, we trade metals, we trade money such as US dollars, Japanese yen, Great Britain pounds, Australian dollar, New Zealand dollar, Swiss franc, and so on. And for metals, we trade gold, we trade silver, we trade bronze. There are so many things you can trade. Palladium, platinum. There are so many things you can trade, metals. And we trade indices. These are stocks. We have the likes of US 30, German 30, SPX 500, NAS 100, France 40, and so on and so forth. You understand all these things as time goes on. You don't need to actually load yourself with too much information right now. You just need to know the basics. Forex trading is the simultaneous buying of one currency and selling another. Buying of one currency and selling another. When you buy the US dollars, you are betting that the American economy is doing well and will be better as the trade goes on. And when you sell back the US dollars to the market by ending your buy trade, then hopefully you will end up in profit. So whenever you are buying the US dollars, this means you are hoping, you know at the moment that America's economy is doing fine and their currency is going up. And you are predicting that it will get to a particular place before any other thing happens. So when you enter that trade and you sell it back at your take profit, at your target, and you leave the trade and you end that trade, that buy trade you are in, you will end up in profit, hopefully, if you do everything right. Generally, the exchange rate of a currency versus the other currency reflects how well or bad the economy of that country is when compared to the other country's economy. When you are trading the foreign exchange market, there are different currencies. We have the major currencies, we have the minor currencies, and we have the exotic pairs. Most Forex traders trade some certain currencies majorly. And as a new trader, you will be starting with the major currency pairs. These currency pairs are the most traded currencies and they represent some of the world's largest economies. USD, that is United States dollars, EUR, that is euro, JPY, that is Japanese yen, GBP, Great Britain's pounds, AUD, Australian dollars, NZD, New Zealand dollars, CAD, Canadian dollars. Below is the list of their symbols, currency names, and nicknames. You can see the code, the country, the currency, and the nickname. We have US dollars for the United States, and the currency is dollar. The nickname is buck. We have the euro. We have the JPY. The country is Japan. The currency is yen, and the nickname is yen. We have GBP, that's Great Britain. Then the currency is pounds, and the nickname is cable. So we have the CHF, that's the Switzerland. Then the currency is franc, and the nickname is Swizzy. We have CAD, the country is Canada. The currency is dollar, and the nickname is Loonie. We have the AUD, the country is Australia. The currency is also dollar, and the nickname is Aussie or Aussie. Then we have NZD, that's New Zealand. The currency is dollar, and the nickname is Kiwi. So currency symbols are always 3 letters. The first 2 letters represent the name of the country, and the 3rd letter represents the name of the country's currency. It's usually the first letter. The three letters of the currency symbols are known as the ISO 44217 currency codes. All right, what does this mean? You know, we said for USD, for US dollars, it is USD. The first 2 letters, which is US, stands for United States. Then the D stands for dollar. That's the currency, the first letter in the currency. Country's currency is usually the first letter. The 3rd letter represents the name of the country's currency and is usually the first letter. Okay, look at euro now. And yeah, Euro, EUR, because the name of the country is Eurozone and the currency itself is Euro, so it's just EUR for Euro. So then the next one is Japanese yen. Japan, JP, that's the country code. Then Y for yen, that is JPY. Now you know why this currency have these codes. NGN, that is NG is for Nigeria, the N is Naira. Whenever you are trading, we have three different kinds of pairs. We have the major currency pairs, we have the minor pairs, crosses, which are the minors, and we have the exotic pairs. All right, the major currency pair is any currency pair that involves the US dollars. So any currency that is traded against the US dollars is known as a major currency pair. Any of these major currencies that is traded against the US dollars is known as the major currency pairs. Then we have the minor currencies. These are every other currency apart from the US dollars. When traded against each other, they make up the Forex crosses. You know, I spoke to you about Forex pairs, the major pairs. Now we are talking about crosses. For example, CHF against NZD, New Zealand dollar, CAD against GBP, Euro against AUD. You know, all this doesn't involve the USD, but they are still from the major currencies. These are called Forex crosses. So we have the Forex pairs, which are the major currencies traded against the dollar. Then we have the Forex crosses, which are the major currencies traded against each other that doesn't involve the dollar. So now let's talk about currency pairs categories. We have three categories. We have the majors, we have the crosses, and we have the exotics. And I explained before, major currency pairs includes the US dollars. These are the 7 major currency pairs: Euro USD, USD JPY, GBP USD, USD CAD, USD CHF, AUD USD, NZD USD. So let's go to the minors, also known as crosses. Crosses are pairs that do not include US dollars. And crosses that include any of the other major currencies are also known as minors. As I said earlier on, they are crosses, they are minors. So you can call them FX crosses, FX minors. So an example of crosses are, as you can see, we have Euro GBP, we have AUD JPY, EUR JPY, NZD JPY, GBP JPY, Euro CHF, Euro CAD. Exotic pairs consist of one major currency and any other currency from an emerging market. As you can see, exotic pairs is any of these major currencies traded against currencies from emerging market, EM currencies, emerging markets. All right, emerging market like Turkey, Nigeria, India, Iran, Dubai, just name it. These are the countries that are not listed as major currencies. Buying and selling currency pairs. That's the greatest question you ask me. And now we know all these things. How do we buy and sell? All right. So as we know by now, Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded in pairs, one currency against the other, and they are traded through a broker online. Any of the major currencies traded against each other that doesn't involve the US dollars is known as the Forex cross. As I said earlier on, we buy and sell currency against each other simultaneously. Let's say I'm buying the US dollars against the Great Britain pounds. I'm hoping the US dollars will go up and the Great Britain's pounds will come down. So how do we now trade this currency? Yes, I've seen what I want to trade. How do I trade it? You access the market via online through a broker. A broker is like the company negotiating your trades for you over the internet. You just control what you want. They place the trade instantly, electronically on the market, instantly. All right. And examples of brokers are Ugo's Way, FX003, IC Markets, and so on and so forth. So many of them. An exchange rate is the relative price of two currencies from two different countries. Exchange rate is the relative price, the amount at which you will use US dollars to buy Great Britain's pounds.